James Hirecheck with this week's Autochartist weekly Forex market recap for the week ending November 23rd. Last week was all about demand for higher risk assets as the euro took off sharply to the upside. You can see from the euro GBP or euro British pound, we had this huge breakout to the upside around the 22nd of the month. This triggered a rally into our target zone near 81.11. You could see that we had this sideways action in this triangle formation before the market took off. This area here represented indecision that had taken place for about the previous week, but then once it became clear that Europe was going to provide aid to Greece, then traders felt a little bit more comfortable, and there was some short covering going on here and some fresh buying. So now it looks as if the demand is going to continue for the higher priced or higher yielding assets over the near term. We also saw a rise in the stock markets, and that translated to greater demand for higher risk assets. One market we looked at towards the end of the week was the New Zealand dollar US dollar, NZD USD. This market broke out to the upside on Friday, broke out through the resistance line of a inverse head and shoulders chart pattern, which is typically a bullish chart pattern. You can see here that we also took out a pair of tops near 82.02, and that triggered a huge rally to end the week. I'd like to see some follow-through to the upside, but that's the danger of trading on holiday weeks like we saw last week. The U.S. holiday on Thursday, many traders took off Wednesday, Thursday, and Friday, and this could have been a reason for some of these breakouts. So we have to see today and early this week whether there's going to be follow through to the upside or whether it was just thin market conditions that allowed these moves to take place. But if there is a resumption of the buying in the NZD USD, then look for the market to drive back to 92.77. In the meantime, 82.02 should be considered to be new support. So again, to recap, the focus this week should be on whether there's going to be renewed demand for higher risk assets. That means strength in the euro, the Australian dollar, New Zealand dollar against the US dollar, and also the British pound. If we see a resumption of this demand, we should see the dollar continue to get punished, and we should see these breakout moves continue. But if volume returns to normal and short traders take control again, then we're going to see some corrective moves for the first few days of the week. This has been James Hirecheck with this week's Autochartist Weekly Recap for the week ending November 25th.